Happy Monday. It's Cynthia Fick with Financial Life Planners, and this is your August 29th, 2002 stock market and economic update. Well, last Monday when we spoke, I warned that I thought it might be a volatile week. We had the Federal Reserve. They don't have a meeting in August, but they were going to be speaking at Jackson Hole, the economic conference, and it might lead to some volatility. And well, it did. And we'll talk about that in one moment. But I want to first off congratulate you. You know, you have just lived through one of the worst periods of time for a 60-40 stock market blend of stocks and bonds in the last 50 years. So you have lived through that. And let's go back and talk about what happened last week. On Friday, as you may know, the stock market experienced a 3 to 4% drop because Chairman Powell basically said, oh, sorry, you misunderstood me. A couple of weeks back, I did not mean to say that we are pivoting and going softer on inflation. In fact, no, not at all. We are going harder on inflation, and we will hold that in check for you. So the market basically in one day priced in another 100 to 150 point increase in the federal funds rate from the Federal Reserve. So that is what happened in one day, and it's still continuing a little bit today. And so what's really going on behind that? Is the Federal Reserve actually trying to crush the stock market? No, I do not believe that is the case. They are, however, trying to remind the market that it may have gotten a little ahead of itself and that they're going to still be tough on inflation. And that was being spoken by many of the members of the Federal Reserve Board leading up to this meeting, which made me think he was going to let us know what they really thought. And so again, the market priced in a big uptick in the federal funds rate. They're going to increase rates most likely over the next 3 months. And the market is also pricing in, by this downturn, a 90% chance that we're going to have a recession. So is this overdone? Is the market overreacting? Is the market over negative? Because it seems to be assuming that inflation is here to stay and it's only going to accelerate and get worse. Well, how should you respond? How should we respond? It depends on what you think. Pretty much every economic indicator is cooling when it comes to inflation. All the news we're getting about the economy it's cooling. So there's no evidence to suggest that inflation is going to climb and accelerate and get worse and worse. So we're kind of like at the point again where the market will respond how to act. And I hate to say it's one of those times when we need to rise above what's going on in the market and focus on what we know to be true. Not many people out there, and obviously the market isn't doing that itself, because most people, even the stock market sometimes, does the wrong thing at the wrong time. My thought, and I will say, if it changes, if my thoughts change, I will let you know and we will get defensive again. But my thought is inflation is coming down. Things have started to cool off, and this may be the time in the next couple of weeks to be slowly going back into the market. So that is my plan. That is what if we've discussed you having more in stocks, this may be a time where I do that, but I will let you know. And I also reserve the right to change my mind if the market shows us some things that aren't looking good, but that has not happened yet. In fact, I think all the market has done is price in a probability of things happening, and that is always a good thing. So Cynthia Fick with Financial Life Planners, and I will be talking to you next Monday. Have a good week. Bye.